All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I'm jumping on about 10 minutes earlier than making any challenge trade decisions. We'll look to go and do that here in 10 minutes. As it sits right now, there are no new signals, and as it sits right now, we wouldn't be making any adjustment to Alibaba, so nothing really to do there. That could change in the next 10 minutes. I'll see the final reads here on my other screen when that happens, and I'll wrap up the video here with that instead of starting the video here with that. It's been a pretty quiet day in the market. We talked about last night, overnight futures were pretty quiet, and you know what, chances are today we're going to be pretty quiet, and you can just see here, I mean, today is traded in, a 10-point range on the market, which is a pretty tight range. The Qs are down 8 cents. The SPY is down 9 cents. IWM is leading the way here today. That's been an unusual circumstance. We have not seen that happen very much. We are seeing banks push higher in the face of rising bonds, which is really interesting, which I think if you're going to kind of go back to kind of this Teflon-coated market argument, you just point to that today and say, hey, yes, absolute Teflon-coated here when it comes to the banks. Keep watching Bank of America, wondering if it's ready to break on out. Let me pull up the chart here. Great earnings, has had kind of this consolidation here. Yesterday talked about it, was trying to break out, failed. This morning gaps on down, sells off a little, and okay, here we go. We don't quite get 2 days worth of sell and then a rebound. We're kind of getting a rebound here, so just kind of still in kind of that no man's land here for Bank of America. I do think if it breaks yesterday's highs, most likely the breakout is on. And I think you can make a pretty good argument that the breakout might be on today, given how it's performing relative to bonds, here on the day. So, we have this kind of punch up here in bonds, and seeing the banks move higher in that's just very, very interesting. Now, speaking of banks, JP Morgan came out here this afternoon and reiterated their overweight rating on Caterpillar. Okay, all right, nice. But what they said is very important, and I think it has to do, or I think it speaks volumes to some other things out there, and want to go and show that. And Caterpillar here, JP Morgan analyst, reiterated overweight after they reported a mixed Q1 and reiterated their 2019 operating outlook. She views Caterpillar as a compelling valuation and strong cash generation in 2019. It says would be a buyer of the stock on a pullback. So what's interesting, and then she goes on and talks about the top line growth, which is revenue, and used the word modest. That's the kind of upgrade that doesn't get traders too excited, long-term investors too excited. It's a valuation story with a modest revenue growth. That's the kind of story that switches from revenue growth to revenue contraction pretty fast, and actually creates an exodus of investors, with that particular stock, or better said, with that particular sector. Several months ago, we talked about NGLOY, BHP Billiton, RIO, as they broke out here in January and had a massive breakout. And they've been great runs. But after looking at the Caterpillar earnings, it's time to leave. It's time to be gone, these stocks. BHP Billiton. We've seen the analysts come out of these stocks. In fact, Goldman Sachs took them off took RIO off of their conviction buy list back here in March before the last big leg up here, right? Citing, aggressive valuations, but these have had monster runs. These are priced for absolute perfection. And if we're talking about a sector or a group where, the revenues contract at all, there's going to be a serious pullback here. It's not going to happen all at once. It's probably going to come down a little bit and then get some sort of really nice bounce. But overall, from a longer term standpoint, it's time to ring the register when it comes to these names. And I think that's what you kind of read from Caterpillar's earnings. Now we'll have earnings on BHP and RIO and all of that, here in the coming weeks. But not often do you kind of look and go, okay, this stock has a great read through for others. But I really think when it comes to Caterpillar, when you look even what the analysts you look at what Caterpillar said, it doesn't have a positive read through for some of the biggest mining companies that are out there, especially when Caterpillar, most of their growth is service related. It's not equipment sales related there. So anyway, just wanted to kind of touch on that, comment on that here as we see that shift, as we see that kind of change. Now, today after the bell, we're going to get earnings that drive the market. And you say, well, Jeff, Caterpillar that typically drives the market. And you're right. Most markets, yes, you're looking at Caterpillar earnings and going, okay, that's going to drive the market. Not in this market. This market is tech. It's all about tech. And if tech goes up, market goes up. If tech goes down, market goes down. This market, it's had times where it's been about healthcare. Market didn't much care about a meltdown in healthcare. Didn't really care, right? It just continued to march on. And as goes tech, so goes this market. And so have to be looking at tech earnings, right? As the driver. We saw Twitter yesterday, a tech that doesn't really have a big read-through for other tech companies. Good earnings, great. Market goes, right? Today, we didn't have any real tech earnings this morning, so market just kind of sitting. After the bell, though, we will have tech earnings. We're going to have Tesla, which, it's its own story. I'm not going to lump it into tech, even though it's on the NASDAQ. But Facebook, Microsoft, they're the two big ones in terms of tech. And let's face it, Visa's a tech company. PayPal's a tech company, right? When it comes down to it, they're not holding money. They're not banks. They're not financials. They're tech companies with the financial market, and they grow based on their innovative technologies that continue to cause consumers to swipe the card, swipe, and every time somebody swipes the card, they get paid. PayPal a little bit different, but online technology there. So these are going to be the big drivers. And if you want to know what way the market's going to go tomorrow, you look at these earnings, you look and go, okay, are these stocks trading up? Are they trading down? If they're trading up, market's going to get bought up tomorrow. If they're trading down, market's going to trade down tomorrow. And it's going to be that simple going into tomorrow. And, it's going to be very interesting. I don't think Facebook's result ultimately is going to say a lot about the market. I don't think their result is going to, give investors a whole lot. Microsoft's will. They will give investors a lot, and I do think Visa will as well. If that story remains that high growth revenue story, it'll give investors a lot of confidence. So we'll have those after the bell. But as we get into tomorrow, we're going to have a big jam-packed earnings day tomorrow as well. Amazon after the bell, Intel after the bell, but in the morning we'll have Comcast, little not really market mover, Altria, not really market mover, UPS, Valero. You'll notice none of these are really tech names that are reporting before the market opens tomorrow. So, for the chance of tomorrow morning's earnings to outshine this afternoon's earnings, pretty slim. Pretty slim there. And then, we'll probably go into the same situation tomorrow where you look into the bell and you go, okay, you know what? Whichever way these tech stocks go, we're going to be, seeing a reaction that way. So far when you look at the few tech stocks that have reported earnings, it's been very positive. They don't have some of the holes that We see, even in a Caterpillar, they don't have some of the holes that we saw in a FedEx. They don't have some of the holes. Micron has a few holes, but that's a very chip-specific story there with it. But anyway, that is going to happen here after the bell today, and I think it's going to be the driver here for the rest of the week as the market sits up here near these all-time highs. Now I'm going to pause here for about 30 seconds. Let me get the report here. See if anything's triggering. All right. Looks like there are no triggers here this afternoon, as I suspected. There wasn't really much that was close before I got on video, so I didn't expect anything to change. But do run the algo here, right at 1 o'clock. So 1 o'clock my time, 3 o'clock Eastern. So no new signals here this afternoon. We do have Alibaba here on this stock exit level 184.39. Let's go see where it's at right now. It's at 185.55. So it's not there in terms of it's not at any sort of exit level. Today's pullback has kind of been like other days' pullback. It's not been a whole lot of volume there, and still in this consolidation element here. Did not get the breakout today that we saw, suggested in some of the price action yesterday. We saw a nice boost in the volume yesterday, and that has not seen a follow through, like typically does, but also hasn't offset the signal by moving to a degree that is, that would kind of say, hey, you know what, the directionality here is wrong. All right, so going to a run with that here into the close. Now, as I kind of go, look, I haven't made any trades here today. It's a market where today I kind of look at it. There hasn't been many day trade opportunities, short-term opportunities that I've liked that I said, hey, you know what, this is really nice. But kind of like Bank of America, you take a look at something like a Micron. It had every chance to pull back today. It had every opportunity to pull back. In fact, it did, and it's just kind of been seeing this slow, kind of push up. I think it'll be very interesting to, kind of see how something like a Micron reacts here. I'm not bullish Micron, right? I'm definitely not bullish Micron, but for it to go to 46, 47, it's not going to take much, right? So, it's not been able to break down. It's had some breakdown elements come in, and it has failed to break on down. And generally, when it's had some breakdown elements, fails to break down, it's going to pop higher. And when you look at the price pattern here, for Micron, right? We have this just kind of, very bullish wedge-like pattern. In fact, it's almost textbook, the way that it is formed and the way that it has happened and the way that the volumes have confirmed it, right? We get low volume on the top, right, on this first element, low volume, saying that's not much of a resistance point. This is not a big area for the market. Then we get a midpoint where there's some high volume, and that tells you, okay, now the market cares. We get a little testing. We're just kind of dribbling along these tops, but every time we pull back off these tops, the lows are getting higher. And, it's generally just a matter of time before that breakout. And the breakout tends to be the distance of, this kind of initial pullback. So $6. Now I'd put Micron up here around $50. Yeah, just from a pure technical pattern standpoint. It doesn't have the confirmation, the upside confirmation yet. We have some positive divergence in some of the indicators. But this is one that had, signs of breaking down right back in here in the middle of April. Failed to do so, has held up very well, and would not take much to pop there to the upside. So, one that'll be high on my radar here tomorrow, for some short-term action. It may be tough to get it to trigger, for the challenge algorithm with where it sits, but, it's very kind of in a similar place to what Alibaba was. And I was surprised Alibaba triggered, but it did. So, we could see something to trigger here with Micron as we go into tomorrow. You look at Micron's average true range; it's down here almost near a 1-year low. In fact, if we take Micron's chart here, and let's come in here and go 2 years, and we look at the average true range on Micron over the last 2 years. I mean, the last time the average true range was this low, we were back here in August, September, October. Why is that important? Well, because stocks generally, when their average true range is low, generally the path of least resistance is higher, and when the average true range is high, generally the path of least resistance is lower. Now, that's not always been the case here for Micron, but that is the general market tendency. I think it's definitely one worth watching and worth kind of looking to sink your teeth into. If we do get a little bit of upside, start to come into it here tomorrow. All right. Thanks for hopping on. Have yourselves a great one. And tomorrow I'll jump on. We'll talk about some earnings. And then I'll talk about some of my favorite earnings plays or post-earnings plays with some of the stocks that are out there. Caterpillar, some of the AT&T. What are the actual trades that we can make on them post-earnings that are set up to have quality risk-reward, quality return potential over the next little while. Again, thanks for hopping on. Have yourselves a great evening, and we'll talk to you later. Take care.